Visi kami menjadi sebuah universitas yang unggul dalam pengembangan ilmu dan teknologi dengan berlandaskan nilai-nilai Islam untuk kemaslahatan umat.
Universitas Muhammadiyah Yogyakarta is one of the best private universities in Indonesia. As an excellent and Islamic university, Universitas Muhammadiyah Yogyakarta offers a 3-year degree undergraduate, graduate, and professional programs, which prepares the graduates for being able to meet national and international labor market demand through one of the provided faculties, Faculty of Economics. The world's rapid economic growth insists educational institutions to foster and make changes to embody a better educational system and to confront global challenges in economic and business realms.
Faculty of Economics and Business, University of Muhammadiyah Yogyakarta is an excellent faculty to produce globally competitive economists, entrepreneur, manager, and accountant who are creative, innovative, and professional based on Islamic values.
Faculty of Economics and Business of Universitas Muhammadiyah Yogyakarta encompassed undergraduate programs, namely Department of Management, Department of Accounting, Department of Economics, International Program for Islamic Economics and Finance, International Program of Accounting, and International Management and Business, as well as graduate program, which is Master of Management. The teaching system at Faculty of Economics and Business of Universitas Muhammadiyah Yogyakarta is supported by capable teaching staff of economic and business fields. The teaching staff comprise expert academicians and practitioners. Students of the Faculty of Economics and Business of Universitas Muhammadiyah Yogyakarta may communicate with the teaching staff both inside and outside classroom. Faculty of Economics and Business of Universitas Muhammadiyah Yogyakarta provides facilities to boost the learning process at each department. Facilities of Faculty of Economics and Business of Universitas Muhammadiyah Yogyakarta embrace the following: students and teaching staff of Faculty of Economics and Business of Universitas Muhammadiyah Yogyakarta obtained a number of national and international achievements, namely the winner of Indonesia Young Sociopreneur at Universitas Gadjah Mada in 2016, the best paper of Sharia Economics Day at Universitas Indonesia in 2016, the winner of Sharia Economics Business Competition at Institut Pertanian Bogor in 2013, the winner of UNES Capital Market Competition in 2016, 2 gold medals of the 37 PIMNAS at Universitas Diponegoro, Semarang in 2014, 2 awards for the best research at Otoritas Jasa Keuangan in 2016, the best paper of INSHIMA in Vietnam in 2016, Mount Elbrus expedition in 2014, and other achievements. Not only does Faculty of Economics and Business of Universitas Muhammadiyah Yogyakarta focus on the learning and teaching, but it also attempts to cooperate with various educational institutions, private institutions, government, and industries in Indonesia and overseas. Therefore, Faculty of Economics and Business of Universitas Muhammadiyah Yogyakarta engage the students in contributing to community to embody one of the 3 principles of higher education: community services.
Okay, dear participants, before we start the program, could you please set your camera on and ensure you have already used your background, so we can start right now, exactly 1 p.m. Assalamualaikum Bu Arliana.
Waalaikumsalam warahmatullahi wabarakatuh.
Apa kabar Bu?
Alhamdulillah baik.
Saya lagi di kantor ini Bu sama teman-teman staff, jadi izin pakai masker Bu.
Ya, biar aman ya.
Bisa kita mulai sekarang Bu Arlina?
Silakan.
Ya. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Very good afternoon, dear sisters and brothers of ITYIELds 2021. First of all, let's thank Allah Subhanahu wa Ta'ala who has given us His mercies and blessing, so we can meet now in the best of health and iman, inshallah. Secondly, salawat and salam may always be delivered to our Prophet Muhammad Sallallahu Alaihi Wasallam and his companion and ummah who is following him. And thirdly, on the behalf of the committee of the 4th ITYIELds 2021, we would like to welcome our guest lecturer, Dr. Aliana Abu Bakar, who has been with us today. Thank you, Bu Adina. Welcome to our programs.
Thank you. You are welcome as well.
So today, dear sisters and brothers of participants, we will have a very great discussion with her concerning the role of Bank Central or Bank Indonesia for financial system stability. Before we start, Ibu Dr. Alina, I would like to inform you several things. First, this program was actually established since 2015. So we have been in 4th ITYIELds, whereby the abbreviation of ITYIELds, International Training for Young Islamic Economic Leaders. So particularly this program aims to gather all of the young students or young leaders in the area of economics and finance from around the globe to have discussions and interactions actively in this program. And basically this program is set for 1 month online, and the program is set financial in the midst of pandemic. So this program basically tries to equip the participants how they understand the rule and the importance of some institutions such as Bank Indonesia and others, how they basically concerned with the pandemic and how the policy must be made so that the financial stability still can be maintained. And secondly, this program, Alhamdulillah, is followed by around 120 participants, Ibu, from 5 countries, from Bangladesh, from Bahrain, Malaysia, Indonesia, and also Pakistan. But unfortunately, this program is divided into 4 courses. So we have 4 courses offered: bank and non-bank financial institutions, natural resources economics, labor economics, and research methodology. So therefore, the participants are divided into 4 courses. And for this course, Alhamdulillah, we got around 30 students or participants. But unfortunately, some of them are coming from Malaysia, Bu, and they informed me just now they just got vaccinated, Bu. So just vaccinated, so that the condition is not that good enough. So they have to get some rest. So they informed me to get permissions to not be joining these programs. And certainly, dear participants, before we start, we are so thanks and very good condition right now to have our speakers, Dr. Alina Abu Bakar. So before I start, I would like to just introduce her to you so that you can get very convenient interaction later on during her presentations. So Dr. Aliana basically right now is the director of in the Bank Indonesia Institute, one of the think tank of Bank Indonesia or central bank. And her career also before in the Bank Institute was the deputy director in the Department of Macroprudential Policy in Central Bank of Indonesia, and then previously she also the deputy director at the Department of International. So I do sure that her background is very important for us to get some information later on, and then you can ask your questions and you can confirm your opinions to her about how we look at the existing conditions and how the Central Bank of Indonesia will respond to the current existing conditions. And Bu Arlina, before I give the floor to you, by the way, has already been joining us for 2 weeks since 2 weeks ago, since 20th of September, July. So during the 2 weeks journey, they have already conducted some exercises and some activities concerning the activity of central banks and OJK, Ministry of Finance, Islamic Bank, Conventional Bank, and also the LPS. So all of them has already got some informations and also some theoretical background of those particular institutions. But some of them are still confusing because they coming from Malaysia, Pakistan, and also Bahrain, maybe not quite familiar with our institutions, particularly Bank Indonesia. And also they have some also inquiries regarding with the who is the best, what is the role of Bank Indonesia in the financial stability. So I do sure that dear sisters and brother participants, here your chance to get more confirmation and clear about those questions with Dr. Arlina's presentation just now, after this. And with that, Dr. Arlina, I give you maybe around maybe 30 to 40 minutes to have presentations. And then the rest, maybe we can get some Q&A sessions with the participants here. And for your information, Dr. Alina, we have here the participant from Malaysia, from various universities in Malaysia. If I may mention, they come from University of Malaya, University of Utara Malaysia, Bahrain University, and also International Islamic University Malaysia, University Putra Malaysia, and University Sains Islam Malaysia. So with that background, some of them coming from finance background, Sharia backgrounds, and economic backgrounds. With that, Dr. Alina, I give the floor and screen to you. Time is yours, Doctor, please.
Thank you very much. How I can call you, Pak Dimas. Okay.
Yeah.
Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Good afternoon to all of the participants. I think I can start my presentation, and moderator, please remind me if the time is coming up to me. Okay, I will using this. Yep. Okay. Okay, so I will share with you, as requested, the topic on the role of Bank Indonesia in promoting financial stability. My presentation will cover 5 subtopics. The first, I will share with you the snapshot of recent economic development. This is a very important because beside the theoretical background, I will share with you the example of the policy, and will be more understandable if you are also have the same update with us about the current recent economic development. The second one is about the central bank reform. So why is the central bank around the globe now is concerned about the financial system stability? And then we will going through the more detail about the financial system stability, systemic risk, and macroprudential policy. And also we'll cover 2 issues, which is currently is kind of a source that we need to put as something that have a big impact to the financial system stability, which is a digital transformation. And a little bit I will share with you also about the Islamic economic and finance, and how then the Islamic economic and finance skills also contribute to the financial system stability, especially in Indonesia. Okay, this is the current condition of economic. As the small open economy, as you may know that Indonesia is a small open economy, we have to concern about the global condition, because the global condition will have a quite significant impact to the Indonesian economy. Now the global risk, if we see advanced economy now is have the faster policy normalizations, because they are now have quite a bit faster in recovery, like the they now have vaccines and also many activities that I will show you through some data and chart after this to show that how advanced economy now better than the developing economy. And also we understand that the Delta COVID-19 variant also become one that can will also can influence the current conditions. And the global risk will come to the domestic economy through a trade channel and also the financial channel. Even I think not only Indonesia, but also almost in every country have so many things about the fiscal stimulus. There's still impact through the trade channel. We see that a global economic condition like the US, Europe, and China as an advanced economy, and how is the situation in the emerging economies, including India and also Asian 5, that will influence the world trade volume, also the price of the export and import, and also oil price. And through the finance channel, we see that the portfolio adjustment in the investor from the F1 economy will have also the influence with the capital flow, and at the end it will also influence the current situation in the exchange rate, and from the trade channel how then export import the consumption will also influence the investment. And for the domestic risk in Indonesia itself, risk mostly coming from the how the progress in COVID-19 handling and mobility restrictions, and also consumer and business expectation to expand and to running their business. And all of them will also influence the domestic demand. And of course, this current economic situation in domestic will also become one consideration in how then Bank Indonesia will promote the policy mix strategy. In the strategy itself, actually coming from Indonesia, we are not put one single policy itself, but I will show you later how then we mix the policy in Bank Indonesia, like the monetary, prudential, and payment system, and financial market deepening, a Sharia economy, and together also close coordination with the fiscal policy and structural reform. I will show you just a little bit data regarding how the global economic recovery is expected to exceed the previous projection, despite the recent uptick of the global financial market uncertainty. We see that for in advanced economy, we see the economic growth is accelerating now, especially in US and Europe, because of the rapid vaccination rollout, and also with the fiscal and monetary stimuli. And the growth in China also remains solid. We can see from the global GDP growth, from global PMI, consumer index, and also from retail sales. While in the emerging economies, outlook like India and Asian have been a little bit downgraded. However, in line with the introduction of mobility restriction, maybe it will overcome the new wave of the COVID-19 case. And in line with this recovery, Bank Indonesia also upgraded its global economic growth outlook in 2021 to 5.8 from 5.7. Now also data regarding the global financial market uncertainty that elevated restrains capital flow to developing economies. We see here that investors are pursuing the flight to quality because of elevated in the global financial market uncertainty has been stopped by market concern. It is offered the latest wave of COVID-19 infection, and potential fallout of the global economy, and together with anticipation of a US Federal Reserve tapering policy. And from the domestic side, we can see here that Bank Indonesia revised down its national economic growth projection from 2021. Now the range for the projection for the growth is 3.5 to 4.3%. Previously is 4.1 to 5.1%. This because of at least the reason that we see economic growth is predicted actually regain upward momentum in the fourth quarter in this year, as the vaccination rollout and the strict compliance to health protocols allow for greater public mobility, along with ongoing stimuli and also improving export performance. In the regional side, we see less economic moderation has been recorded outside the Java, particularly in Sulawesi, Maluku, Papua, and supported by the strong export performance. We see here that economic growth by expenditure from the household consumptions, from the non-profit institutions saving household. We see here that the consumer consumptions and export and import is like the source of the growth in Indonesia. And also we see the optimism of the realization of the state budget and economic growth by a sector we can see here. In the financial systems, We see that the capital adequacy ratio in the banking is remain high, is about 24.25, accompanied by the persistent low non-performing loan, and also boosted by the low liquidity condition, a lower interest rate on the new loan. And we see that the bank intervention function charged into positive territory in June 2021, although the opportunity for further growth still remain. And the recent gains stem from the stronger demand for loans driven by the ongoing recovery in the corporate sector, household, medium, and small enterprises sectors. And the supply side, we see that banking industry propensity to loosen the lending standard as reflected here by the lower lending standard index that also contributed to the positive credit growth. And Bank Indonesia still continue to strengthen the policy, of course, the synergy with the Financial System Stability Committee to implement the integrated policy package to maintain financial system stability and to stimulate the financing for the corporate sector and other priority sector, including small medium enterprises. This is the current condition in the economy in Indonesia. And now we move to the central bank reform. Before I start with the role of the Bank Indonesia and the maintaining financial system stability, I will introduce to you what is actually a BI objective and task. Bank Indonesia actually, as the central bank, I think has one single objective, which is achieving and maintaining the stability of the rupiah value. And the stability of the rupiah value is reflected by the two aspects. The first is the stability of rupiah value against goods and services, which is reflected by the rate of the inflations. And the second one is stability of the exchange rates, which is reflected by the development of rupiah exchange rates movement against other currencies. And to pursue this objective, Bank Indonesia is supported by the three pillars representing its three sectors. The first is formulating and implementing a monetary policy. The second one is regulating and maintaining payment system availability. And the third one is financial system stability, of course, supported by the international management enabler. For the financial stability, maybe I will later on share with you that financial system stability is a shared responsibility among other institutions in Indonesia, and how is actually the institutional arrangement I will show you later as well. And this is still going back to the macroeconomic policy and Bank Indonesia polemics. Actually, all of the macroeconomic policy, fiscal policy in the supply side, and also the structural policy still on the supply side. Even for the Bank Indonesia, with more concern on the demand side, we maintain the monetary and also exchange rate, the fiscal as well. All of them is policy actually have the same goal, which is social welfare, reflected by the economic growth, low inflation, and low unemployment rate. So this is actually the main subject of the macroeconomy, and Bank Indonesia as a part of the agent to support the macroeconomic policy to achieve the social welfare. Even we have the policy, we still need to coordinate with other institutions. Bank Indonesia is independent, of course, in how we can achieve the single objective of Bank Indonesia, but to make sure that the objective of the Bank Indonesia is still have a relevant and to support the economic growth, the low employment rate, that is the important how then we need to make sure that everything is on the same boat to achieve the social welfare. For Bank Indonesia itself, the policy mix design here is based on the three pillars. As I mentioned before, is the first monetary policy mix is also to maintain macroeconomic stability, and the Bank Indonesia policy mix also to maintain the stability of growth momentum and to strengthen economic structure. Of course, we are not only want to achieve like the higher economic growth, but how can make sure that the economic growth is still strong, sustainable, balanced, and inclusive. Okay, this is Bank Indonesia polemics based on the three pillars. We have like three pillars. It's also like we know as the trilemma or the central bank policy. The first is monetary. Monetary also inflation targeting, how we manage stable exchange rate, favorable current account deficit, and sustainable growth. And from macroprudential, how to we maintain the counter-cyclical systemic risk, financial deepening, and financial inclusion. And for the payment system, also how we manage the money circulation, like the paper, card, or digital economic and finance, and financial market and payment infrastructure. All of them actually have a link like a macroprudential policy and monetary. We can combine the instrument and the condition by using the capital flow management, and also from macroprudential policy and the payment system, how we make sure that the financial and payment infrastructure and the money supply process and digital economic and finance, if we are related to the payment system and monetary. Here we can see that monetary policy, macroprudential policy, and payment system policy, they have their own objective, but at the end we need to integrate this policy to achieve also the macroprudential stability and also macroeconomic stability. I think here monetary policy create price and exchange rate stability, of course, to support sustainable economic growth through interest rate policy, foreign exchange interventions, accordance with the economic fundamental and market mechanism, and also capital flow management. That is, as I mentioned before, the three objective of the monetary policy. While from the macroprudential policy, of course, it's to support the financial system, balanced information, balanced intermediation, systemic risk mitigation, economic and financial inclusion, and also from the payment system policy. How then the three pillar of the Bank Indonesia policy interactions, we can see here that from the monetary policy itself, and also from the macro policy itself, we as central bank in maintaining value of rupiah, we have many kind of instrument that we can use, but we need to make sure that if we like using the specific instrument for the monetary policy, it will more effective if we sure that suppose that we are increasing or decreasing the BI rate, we have to make sure that this rate will reflect it in the market, like the banking sector also can then lowering and also increasing the interest rate. This will happen if the intermediation itself is going well and the payment system itself is going well. So this is actually the framework of the financial mix in Bank Indonesia. So we have to make sure that the efficiency and the effectiveness of the monetary policy will be equipped by the macroprudential policy. So we make sure that all of the Bank Indonesia policy could achieve the purpose in maintaining the stability of rupiah. Okay, this is also more explanation about the interaction between monetary, payment system, and financial system. Here, actually, the price and maintain financial stability mostly are supported by the monetary and also financial system, while the payment system here is to make sure that a smooth, efficient, safe, and reliable payment system. So the monetary policy can achieve and maintain the price stability and to contribute to the maintain financial system stability, and also the efficiency of the financial system intermediation and resilient of the financial system, and also the well-functioning payment system, monetary system, as well as financial system, all of this will act as the basis for the economic growth, prosperity, and also the financial system stability. As you can see here, that payment system plays an important role in the transmission of the effective monetary policy and supporting efficiency or the intermediation and the resilience of the financial system. Why then we see that there is a more concern of central bank in the financial system stability? If we learn from the global financial crisis, we see that the subprime mortgage crisis sparked the global financial crisis and resulted huge financial losses in the advanced economy, especially in the US and Europe territory. It suggests that the situation, that the cause of the crisis and how then we see that the crisis in the financial system can have very big impact to the GDP as the whole economy. And this is also some of the lesson that we learned that macroeconomic stability could not be reached without the financial system stability. We learned that how global crisis has revealed that keeping the inflation low without maintaining the financial stability are not sufficient to craft a macroeconomic stability. And that is the challenges what policy mixed instrument for Bank Indonesia. In the small open economy, the capital flow dynamic implied that the monetary policy authority has to utilize the variety of the instrument. And as the considering the impact of global financial crisis, I think it's more common that the Financial Stability Board, which is established under the G20 and also the IMF, the BIS, the central bank to complement their macroeconomic policy with macroprudential policy. And G20 declaration to strengthening the financial systems, that they stated that we will amend our regulatory system to ensure authorities are able to identify and take account of the macroprudential risk across the financial system. So what is actually the concern of the central bank and the financial system itself? Now we can see here that the financial stability previously are more concerned about the financial institution. So monitoring individual financial institution health is not enough. So even the banking by institution is helped, but that's not enough. We need to take into account other aspects from the macro perspective. The first is the procyclicality. Financial procyclicality due to the financial accelerator. It's mean that the procyclicality mean that like the financial institution, they tend to provide a credit when the economic is still going well, but they are not going provide any credit when the economy is slowing down. This is mean that the intermediation, the function of the bank to support to financing the real sector is not good. So this is the risk of the procyclicality. The other one is the systemic risk. The systemic risk is spreading of the systemic risk through the financial interconnection and network. So it's mean that because of the highly interconnectedness, highly interlinkage among financial institutions. So if one financial institution have problem, it will also have impact to other financial institution. The other one, I think, is the contagion because of the herding behavior and asymmetric information. This is the risk that as a macro, we see that this is the risk that we need put into account, because this risk really have the source of the financial instability and could lead to the crisis situation. And for the reform at the central bank policy and mandates is the financial stability mandate. Then now the central bank have to taking into account the financial stability, monetary policy that cause instability in the financial system and economy. And also the financial stability mandate for the central bank will strengthen the effectiveness of monetary policy transmission. And for the macroprudential policy, we see that the monetary policy cannot fully address the procyclicality and systemic risk because the monetary policy is more across the board. So the macroprudential policy is more targeted. I can share with you later some instrument of the macroprudential policy. While the macroprudential policies not be able to address the microfinancial linkages and only focus on the individual bank soundness. And capital flow management also, we see that macroeconomic risks like the excessive lending, balance of payment imbalances, and volatile exchange rate, and also a financial stability because of the exchange rate and maturity risk and risk of capital reversal and sudden stops. All of this behavior and this condition is a source of input that then the central bank policy and mandate is reforming. Okay, the next is a mandate for the Bank Indonesia. We see that post a global financial crisis, central bank policy should consider stronger interlinkage between monetary stability, financial system stability, and payment system. As I mentioned before, monetary policy, payment system policy, and banking policy before the global financial crisis. And after the financial crisis, the main difference is the banking policy. Actually, it is not only banking policy, but also the financial institution policy. We divide it into two, which is the macroprudential policy is for the financial institution soundness is by Financial Services Authority or Otoritas Jasa Keuangan in Bank Indonesia, while the Bank Indonesia still maintain and develop to regulate financial institution through the macroprudential policy, especially for the systemic risk and also procyclical risk and contagion risk. Okay. It is, I will bring, I think it's still relevant to share with you that the central bank coordination with fiscal policy and the structural reform. The previous slide showing with you how then the closer interaction between like the Bank Indonesia and Financial Services Authority. This slide will I will share with you how the close coordination between Bank Indonesia with the fiscal policy and also for the structural reform. We see here that if you would like to boosting the output, we have to maintain between the supply side management and also the demand side management. That is one theories that support that the need interaction and policy coordination between the central bank policy in maintain price stability and support financial system stability by interest rate, foreign exchange, capital flow, macroprudential policy with management of the demand side. From the fiscal policy in maintain macroeconomic stability through fiscal deficit and also tax policy and with the structural reform. How then we push the economic growth through the capital productivity, labor force and technology and reformation in infrastructure, investment, commerce and labor sectors. So the next is we now move to the close regarding to the financial system stability, systemic risk, and macroprudential policy. First, I will share with you the element of financial system. I think it's not only in Indonesia, but the whole definition of the financial system. Financial system is a system that consists of the financial institution, market, infrastructure, non-financial corporation, and or corporate operation and household that interact each other in form of funding and lending in the economy. So the element of the financial system, if we can divide it into the function of them, like the financial service providers, it could be bank or non-bank financial institutions. The financial service customer, it could be corporate and household, and financial market instrument. Here is the securities, share, even Bank Indonesia certificate, For the financial market, money market, and capital market and infrastructure is the payment system infrastructure. We can see here the interaction between the surplus units and also the deficit units. All of them is the element of the financial system. That's why if we are talking about the maintaining the financial system stability, we cannot just focus on the service provider itself, like the focus only for bank or non-bank financial institution. What we need to focus also with how is the capacity of the services customer, how is their behavior, and how is their expectation, and the financial market instrument. There is any available instrument for the market instrument. So the intermediation and the activity and the financial market could go smoothly. We have to make sure, and also for the financial market, whether we have enough infrastructure and suprastructure for the money market and capital market, and for the infrastructure itself, whether we have a best payment system infrastructure even for the retail market or the high value market. So in terms of element of financial system, we can see in what aspect is Bank Indonesia have the role. Of course, we have a role in all of the element in the financial system, but with a different degree. I will show with you later, but I would like to share with you more focus now in the systemic risk and financial system stability. Financial system, actually we need to maintain the financial system not vulnerable. I mean vulnerabilities as the considered condition of the financial system that could amplify and accelerate the shock spillover. I have like the house, our home, our house. Maybe at night I forget to lock my house. This is vulnerable, but it still not become the crisis if there is nothing happen at that night. But unfortunately, there is shock. I mean, there is someone just to enter to my house and they grab anything. This is the same with the financial system. The financial system, if they are not vulnerable, they maintain not vulnerable. If there is any shock is coming from the event that could be exogenous or endogenous. If the finance system is quite stable, it will not have any impact. That's why in maintaining the financial stability, our observation is not only maintaining the shock, but also the vulnerability of the financial system. So the role of Bank Indonesia is also to make sure that the financial system is strong. So we also measure and the potential of shock and how is the impact to the financial system stability. So we conduct like the stress test. So we also, maybe I will tell you later that how can the interaction between Bank Indonesia and also other institutions in maintaining financial stability. We share the data, we share the current condition, the assessment, and also the policy. Of course, it's if the vulnerable financial system and there is a shock, and it will be a systemic risk, that the probability of instability in the financial system and the risk increase in parallel with the increase in the vulnerability and become materialized when the shock exists. So the financial system resilience, if then even there is any shock, but the financial system resilient is still stable, so the functional of financial system is going well, it's still not like the nothing happened and it support the economic growth. However, if there is a happen the financial system instability, of course there is a disruption on the function of the financial system, like the not function well in the financial institution, like in delivering their credit to the real sector. It could also bring to the crisis. And then in this situation, in the crisis management protocol, then we need to activate the mitigation of the crisis. And the crisis mitigation itself is conducted in accordance with predetermined procedure in the crisis management that includes crisis prevention and mitigation, as well as the decision-making process and coordination with other related institutions in Indonesia. Okay, and this is the systemic risk. What is the systemic risk? The systemic risk, even though the financial institution performance is considered sound, activity and characteristic of financial institution and the financial system could induce the systemic risk. Is at the first, like I mentioned before, the financial institution tend to be pro-cyclical. You see that the time varying dimension. There is the over accelerated of the optimism. So the banking sector boosting the credit, excessive credit, and there is the accumulation of risk, because then in the in contraction or in slowing down of the economy, the financial institution they have pessimism and they don't want to release the credit, because they think that probably the possibility of non-performing loan quite high if they provide loan in the not quite good economy, high risk averse. This is like what we call is a procyclicality risk. And the other one is cross-section dimensions. It's happened because the characteristic of the financial institution that contributes to the systemic risk, the highly interconnectedness, too big to fail, like the size and the complexity, and also the common risk factor. And this is the type of the macroprudential instrument. As I mentioned before, we manage and we monitor the source of the vulnerability in the financial system stability. It could be because of the credit boom, because it happened based on the same indicator. Then we can propose the macroprudential instrument like the broad-based, using the broad-based tools like the counter-cyclical buffer, leverage ratio, dynamic provisioning. The objective is to improve the resilience to the shock and the mitigate procyclicality behavior. And other source of the vulnerability is excessive credit to household, and the procyclicality exists between credit and asset price. So the instrument, we can propose the household sector like the loan to value ratio, debt services to income ratio, and sectoral capital requirement. And the objective is to limit credit growth on certain sector, mitigating vulnerability arising from the household speculative behavior, and avoid asset bubble price. And the other source of vulnerability in a financial system is increased exposure of corporation, such as higher leverage, higher amount of credit, including the foreign exchange. And alternative instrument here is the corporate sector tools is loan to value ratio, debt service to income ratio, and sectoral capital requirement. The objective is to limit credit growth on certain sector and also mitigate vulnerabilities arising from corporation and speculative behavior. Other sources is because of the increased vulnerability that is related to the systemic liquidity and currency risk. So we're using the macroprudential instrument related to the liquidity tool like liquid asset buffer, stable funding requirement, liquidity charge, reserve requirement, and not open position limit. And the objective is mitigate systemic liquidity risk, improve resilience to liquidity and exchange rate shock. And for the other source of vulnerability is from the structural risk, contagion through the interlinkage among financial system component, and some macroprudential instrument through structural tools like the capital surcharge for domestic systemically important bank, sectoral capital requirement, liquidity instrument, and market infrastructure, like the central counterparty. And the objective is to improve the resilience of two important to fail institution and to limit excessive exposure in financial system. So as the whole, if I can summarize the Bank Indonesia tools in maintaining the financial system stability. We can use the macroprudential policy through several instruments that I mentioned before, or using the macroprudential surveillance, like we conduct the stress test. We also conduct the supervision to the banking sector for certain risk, and also for the financial assets and small medium enterprises development, to make sure that the sectorial can get a credit to the financial institution, so the intermediary function in the economy still going well, and lender of the last resort, and the coordination with other authorities. Okay, in conducting the role of Bank Indonesia and the financial system stability, Bank Indonesia also have some regulation we publish. Of course, in maintaining the financial system stability, most of the instrument is through the macroprudential instrument and policy. However, the monetary and payment system also have influence to the financial system stability. As I mentioned before, that Bank Indonesia policy, we have the policy mix because we cannot just using the specific monetary policy only, but we need to use also other macroprudential policy and payment system policy to make sure that everything is going well. So I mean that the intermediation function to make sure that the policy in monetary will be reflected in the banking sector, in the financial sector. Like the monetary, here is to maintain the market compliance on monetary regulation and mitigate monetary risk. We also like the scope is interest rates, exchange rate, market liquidity, capital flow, and money market. Object is bank, non-bank financial institution, and non-financial corporation. And for payment system is maintain reliable, secure, efficient payment system, and maintain secure and equitable currency management, like the payments instrument, institutional arrangement, payment system mechanism, and infrastructure. And the object is bank and non-bank financial institution. And for the macroprudential, any kind of regulation issued here is like the mitigate systemic risk, support balance and quality intermediation, and enhance financial system efficiency and financial access. Okay, I think this is more detail about the instrument that I mentioned before, because if we have like the time varying instrument, cross-section instrument, you see a broad-based instrument, I mean, it could be applied across the bank, or like the, here is a macroprudential ratio, macroprudential intermediation ratio, and also here is macroprudential liquidity buffer, PLM penyangga, likuiditas makroprudensial, counter cyclical buffer, net open position, and also counterparty here, central counterparty. Also for the targeted instrument like the loan to value ratio, and also minimum research requirement. And for the financial deepening here in that, like the market operator, non-negotiable certificate of deficit, overnight interest swap, and also Indonesian overnight index average. I think we can use and combine this kind of choices of the instrument for the macroprudential policy. And this is the authorities and the financial sector as the institutional arrangement. As I mentioned before, that financial stability is the shared responsibility. Like the Ministry of Finance as the fiscal authority, state finance management, general policy of financial sector, Bank Indonesia also like the as independent monetary authority, macroprudential authority, and payment system authority, and lender of the last resorts, and also mandate for the Financial Services Authority as the integrated financial service industry authority, and Indonesia Deposit Insurance Corporation for the Deposit Guarantee Scheme and Bank Resolution Authority. So this four institutions have the institutional arrangement under the legal basis. I think we can see here the law that issued by Indonesian government. Indonesian government. This is among others that how can we have to interact between these four of the institution. We are under one what we call is Financial System Stability Committee, and the coordination is the Ministry of Finance, and the member is Ministry of Finance, Bank Indonesia, Financial Services Authority, and Indonesian Deposit Insurance Corporations. And this is under law number 9, 2019, how we prevention and mitigation of the financial system crisis in Indonesia. We see here duties of the Financial System Stability Committee in crisis prevention, coordinate, monitoring, and maintain of the financial system stability. And for crisis mitigation, we mitigate financial system crisis and mitigate systemically important banks problem. And the tools for the crisis management protocol, the member institution ongoing monitoring based on the respective institutional authority, as I mentioned before, Bank Indonesia also as member of the committee, also doing some policy and also surveillance, and also the status of the financial system stability. The status of the member institution we'll divide it as a normal, vigilant, alert, and suspected crisis. And we have also regular meeting, incidental meeting, and this status of member institution is based on the monitoring of each institution. Like here, for example, from the Ministry of Finance, crisis management protocol, they have an indicator related to government securities market and how the implementation of the government budget. In Bank Indonesia, the surveillance indicator like the monetary, exchange rate, macroprudential, payment system. For the Financial System Authority, banking, non-bank financial institution, capital market, and for the Indonesian Deposit Insurance Corporation, like the banking stability index, how the movement of a banking deposit through the periodic report, weekly, monthly, quarterly, and or incidental report. So I think this kind of institutional arrangement is quite clear. How is the role of Bank Indonesia and also other institutions in maintaining the financial system stability in normal condition and also in the crisis conditions. And this is also the policy synergy to strengthen national economic recovery. Like the for Bank Indonesia in current situation, like the buy government securities in primary and secondary market, like the stabilizing rupiah exchange rate, lowering policy rate, increase liquidity for repo on the government securities, lower reserve requirement, relaxation of macroprudential policy, and cash on non-cash payment system. And for Ministry of Finance, for the governance spending, how then the social assistance of subsidized tax incentive, interest subsidized state-owned enterprises compensation scheme, and for the financing like the state equity participation, fund placement in bank, also the government institution spending, tourism, housing, aggregate demand, and for the deposit insurance corporations, like the banking deposit guarantee, problem with bank regulation, like the repo and sell government securities to BI, fund replacement in commercial bank, and also for the Financial Services Authority, they concern about the bank and non-bank financial institution, soundness and supervision, also loan restructuring policy for bank and non-bank. All of these policies from each other institution will have influence the banking sectors, like to make sure that intermediation in the financial institution, fundraising and lending to the real sector, implementation of loan restructuring program for business entities, even for the corporation, commercial or medium small enterprises, and also for the real sector, how they influence demand, like the consumption, investment, export and import, expenditure, and create the employment. This is actually, we see that the strengthening the policy synergy in national economic recovery. The interaction itself, I can share with you here. Policy coordination. So Bank Indonesia could not directly provide loan to the real sector. So what then we are doing in Indonesia is Bank Indonesia purchase SBN is a government bond from the parallel market. So to funding the deficit fiscal. So the government have fiscal space to do the stimulus to state tax and expenditure. And also Bank Indonesia also like I mentioned before, like the also can repo sell government bond with deposit guarantee function from the Indonesian Deposit Corporation. So through funding for the fiscal deficit and also have interaction in repo and transaction for the government bond that held by the deposit corporation. Bank Indonesia also actually funding how then the financial services authority in maintaining that the bank credit restructuring policy and also for the non-bank financial institution. We see here that the banking sector also to make sure that intermediate function and the financial services to real sector, we do the like credit restructuring. The credit restructuring, of course, is financing. Some of them are financing by the government and also to the real sector, which is for support like the demand to boosting the consumption. Like what I mentioned, the data show that the government expenditure is the main source of the economic growth currently in Indonesia. So this is the interaction between some institution in not only in boosting the national economic recovery, but also to maintain the financial system stability. Okay, this is I think how the example of the Bank Indonesia policy mix to support the economic recovery itself. We see that from the monetary, prudential, and payment system are directed to support national economic recovery in close coordination with the government and the committee. From the monetary policy, we see that Bank Indonesia stabilizing the rupiah through a triple intervention strategy: spot, non-delivery NDFF, non-delivery forward, and government bond purchase. And also the policy rate was lower 6 times since 2020 by 150 basis point. Up to currency is 3.5%, it's the lowest in the history actually. And she still conducted the large liquidity injection to the quantitative easing and participating in government budget through the purchase of the government budget directly. And this is the macroprudential policy relaxation. You see that the relaxation, the provision or for advanced credit for motorized vehicle financings to a minimum 0% to all type of new motorized vehicle, and also public transparency of basic lending rates, maintaining the accommodative macroprudential policy, strengthening the macroprudential intermediation ratio, and for the digitalization of the payment system is like expansion of CRIS. CRIS is and also extension to 12 million merchants, and BI fast payment system, QR code Indonesian standard. CRIS is stand for QR code Indonesian standard. We hope that CRIS will be accepted to all of the like small medium enterprises and also of the transaction in Indonesia actually. And now we try to expand the using of CRIS through a cross-border payment. And the VI payment system, this is to support like the real, it's like the real-time settlement. And also we developing also Sharia economic and finance, financial market development, and also developing medium small enterprises. This is more detail about the macroprudential policy as mentioned before, the down payment ratio, counter-cyclical capital buffer, and macroprudential equity buffer, prime lending transparency, and also macroprudential intermediation ratio. So macroprudential equity buffer is like the what we call like minimum reserve requirement, but not for the monetary purposes, but for the financing the in banking purposes. Okay. Okay, now I will share with you the issues on the digital transformation and financial system stability, because this now become the source of the vulnerability in financial system. Digital transformation, we see that the now the increasing of the financial technology, financial institution, and also now we understand that how the big tech, big tech company now also providing like some function or the financial intermediaries. This is the issues of financial transformation, and now in Indonesia we still on the progress to maybe not maybe in the near time we will launch also how the API, how to interface between the fintech and also with the banking sector, the digital banking, and the concern also about the emerging risks because of the increasing of the digital finance fintech, like the creative destruction, financial risk, operational risk, increased financial and non-financial linkages, and also legal, ethical, and regulatory issues. And this is how then central bank responds to current situation to make sure that the resilience, the balance intermediation, and inclusiveness in the financial system it still happen, and we take into account this kind of risk that coming from the digital financial system. Some of the emerging risks now is the operational risk. We see that the systemic risk is cyber security issues, infrastructure reliability, and also the idiosyncratic risk, like the application of the functionality, third-party resilience. Here we see that the financial risk, like the credit risk for a loan product, and market risk for the portfolio placement, liquidity risk, mismanagement of fund, reputation risk also, with bad news from the digital industry of the big tech, and regulatory issues. They still also have issues on the legal, ethical, and regulatory issues regarding the data privacy, know your customer, anti-money laundering, contract enforcement, regulatory gap, and consumer protection. And from the increased financial and non-financial linkages here, like the economic of scope and also the scale to interconnected to fail between the financial and non-financial institution, and for now the procyclicality as well, like the behavior of the digital finance also have the same tends to become the procyclicality. And creative distraction for the strategic risk is business sustainability when a new technology is more appealing. So this is the risk that now we are need to take into account, that probably coming from the financial digital finance that we need to measure, we need to monitor, we need to do the surveillance to make sure and boosting the development of the digital finance, the innovation we need to support, but the development of the digital finance to also have to be done based on the prudential basis. Okay, this is the systemic risk potential of the digital finance. We see that the systemic risk potential of digital finance in financial system we could take from the cyber risk, capital inflow risk, and also interconnected risk. Like here, for the foreign source of funding and business model, despite its relatively small amount of funding, foreign funding to Indonesian startup companies has also become big now, especially from the China that also introduced the integrated fintech business model. We also hear that for the interconnected data and platform, like the interlinkage between bank, fintech, and digital finance ecosystem also has increased the risk exposure exponentially, especially when the fintech facilitate transaction in e-commerce or social media. And other form of risk also exists when there is a failure in one of the interconnected platform. And for the cyber risk, we see that the emergence of cyber attack and vulnerability in data privacy have to be carefully responded. And in addition, also dependence on one single communication network must also be mitigated. So we noticed that from the digital finance, there is source of potential that could have a kind of the systemic risk for the financial system stability and also for the economy. Okay, in this the balancing the digital opportunities and risk mitigation, the strengthen the interlinkage between digital finance and digital economy, and also encourage end-to-end digital transformation in banking, strengthen the broaden the collaboration between bank and fintech, improve regulation, entry policy, reporting, and supervision in line with challenges in digital era. Also, economic openness that is aligned with national interests and encourage broader digital acceptance. So, not only we see that there is a potential risk, especially the systemic risk. We need to balance between the digital opportunities, because we see that digital finance is an opportunity to boosting current economy, but we need also do the risk mitigation. So we balance between innovation and risk mitigation. Other one I can share with you the Islamic economic and finance. Maybe other research person have already shared with you regarding the Islamic economic and finance, but I will share with you the role of Bank Indonesia here. So in Bank Indonesia, actually we develop a policy of developing Sharia economic and finance effort Bank Indonesia to support national Sharia economic and finance policy that aim to make Indonesian global Sharia economic and financial center. So in Bank Indonesia, our policy in supporting the Sharia economic and finance is through a Sharia economic empowerment, Sharia financial market deepening, and strengthening research and capacity of educations. This is also, if I can show one of the arrangement, like the like two pillar one, the Sharia business empowerment through Sharia financing, Sharia economic literacy, and at the end, the Sharia business empowerment also can have oriented to the domestic halal product and also the global halal product, and we hope that it could support the current account deficit improvement and to maintain rupiah value stability. So BI as a regulator and also BI as the role as initiator and also accelerator. Okay, and this is also how then Bank Indonesia activity in Sharia economic and finance through pillar 1, pillar 2, and pillar 3. As I think it's still the same. I think BI policy, we need to have the collaboration with other institutions. I think for the Sharia economic and finance, we more broaden in coordination and cooperation. Like the pillar 1 in halal value chain development, institutional strengthening, infrastructure development. We have coordination with this is like the trade Ministry of Trade, Ministry of Industry, small medium enterprises, and also through pillar 2 in Sharia instrument development, expanding investor base, integration of commercial and social finance, regulatory strengthening, coordination with the Financial Services Authority, with Ministry of Finance, and also with Insurance Indonesian Deposit Insurance Corporation. And for the pillar 3, here is organizing like a festival, economic and finance increasing Sharia economic literacy, research and development, and international standing. I think with Ministry of Education, this is the example that a Bank Indonesia policy in Sharia economic and finance also have a strong coordination with other institutions, and also this is the ecosystem that show us that actually in building the boosting the Sharia economic and finance, we need to boosting the ecosystem component, all of the ecosystem component. The same with like the supply side here, the commercial finance, social finance, hello industry, community. We also need to like interact with the demand side from the global market and also from the domestic market. I think this is show us how then we integrating social finance and commercial finance, like the at the end we need to push that the financing to push the economic as a whole, like the growth inclusion, economic inclusion, and also financial inclusion. Because we need that, we know that the dimension of the Sharia business activity is not only the financing system, but also the business conduct and also the product itself. Okay, and this is also the example of the some initiative in halal value chain, like the Indonesian Islamic Creative Industry Program, and also any other initiative. And for the institutional and for the infrastructure, I think this is initiative that we still need to develop. Okay, I think this is the end of my presentation. I think I listened more than 1 hour. Oh my God! But I hope we still have enough time to discuss. Thank you. I go.
Thank you very much, Dr. Aliana, for enlightening presentations. If we listen from her just now, we get some comprehensive explanations and discussion on what the role of Central Bank of Indonesia
Dimas, I think you need to unmute.
Oh, sorry. Okay, thank you, Dr. Eliana Abu Bakar, for enlightening presentations. So from her presentation just now, we can get the information that the role of Bank Indonesia is very important. So she discusses about the role of Bank Indonesia and also the objective of Bank Indonesia, and also the digitalization that has been conducted by Bank Indonesia, and also the role of BI in promoting Islamic economics and finance. So now I do sure you have so many questions in mind. So I invite some of you here. Some of you have already written some question in the chat, but I want to maybe invite some of you to question her directly. Maybe I want to invite Sister Fatin Hanani. Are you there, Sister Fatin?
Yes.
Okay, could you please read and introduce yourself and post your questions, please.
Okay. Assalamualaikum, Dr. Aliana.
Salam.
I'm from Malaysia, University of Science Islam Malaysia. I want to ask a question. What is your opinion about the acceptance of Indonesian people with the fintech innovation in the banking industry? Is it the Indonesian people can accept and can follow the fintech progress? So that is my question. Thank you.
Okay, thank you, Sister Fatin. Doctor, please, you can, if you want to gather all the question or you want to directly answer.
Maybe we can gather some questions.
Okay. Okay, please, another questions. Here I have another one. Sister Hanis, please, Sister Hanis.
Yeah, Assalamualaikum. My name is Naranis. I'm from University Malaysia Sarawak. I want to ask, in your opinion, by Bank Indonesia purchasing government bond in the secondary market with price of foreign exchange, can it really maintain financial system stability as is said by Bank Indonesia Governor Peri Wijoyo? I understand. Thank you.
Okay.
Okay.
Sister Vero, please. Sister Vero?
Yes, I am.
Yes, please, sister.
Assalamualaikum warahmatullahi wabarakatuh. My name is Veronica Sukmawati. I'm from UIN Raden Mas Said Surakarta. What are some examples of cooperation between OJK and Bank Indonesia to maintain financial stability in Indonesia? Thank you.
Okay, the fourth question, I think Dr. Aliana has answered. The question posed by Brother Jaja here, the role of BI and OJK, but maybe Brother Jaja, you want to confirm your question, please, directly to Dr. Aliana, please.
Yes, thank you, Doctor.
Yeah.
Assalamualaikum warahmatullahi wabarakatuh. My name is Jaja Haryono. I'm from IAI Bunga Bangsa Cirebon. Permission to ask Mrs. Aliana Abu Bakar. Currently, BI and OJK share roles in macro and microprudential. How do these two institutions carry out their duties to synergies and provide maximum result in financial stability, especially in the economic and Islamic banking? Thank you.
Okay, thank you, Jaja, for your questions. Doctor, we have 4 questions raised by the participants. Up to you, you want to answer which question first? Doctor, please.
Okay, thank you. I think it have the similar question what Fatin mentioned about the not Fatin, I think. Okay, Veronica, the cooperation between BI and Financial System Authority. Maybe I can share with you that one example of the cooperation is like we do like this. We do the surveillance and supervisions together. So we understand that the OJK, they do the regular supervisory to the banking regularly to make sure that the soundness of the bank. And if Bank Indonesia, based on the resilience and monitoring, if there is some issues that we need to explore more in the sector bank, especially for the domestically systemically important bank, we don't have to do the same thing that Financial Service Authority have already done. So we can share the result of the banking surveillance that have been conducted by the OJK. Based on that report, we can then do the specific supervisory, and we can also share the result of our supervisory. So this is example that in doing the surveillance, in doing for the supervisory for the OJK for the soundness, but if that BI have any concern regarding the specific rates to the specific bank, we can share the result of the supervisory that have really conduct each other. This is one example. The other example that, as we know, that it from the commissioner, both of the commissioner of the OJK of the Indonesian FSA is coming from the Bank Indonesia. So every commissioner board meeting in OJK, Bank Indonesia also share with other member of the board the current situation in the economy and what is the result of Bank Indonesia surveillance. I think it's quite clear that through the composition of the member of the board of the commissioner, which is included the member of the board of the director officially, also cooperation could be more smoothly. That's not only happen to the commercial bank, but also happen like the insurance and also the banking, Sharia banking. This is kind of the cooperation. On top of that, also any other cooperation, like we are sharing the data, information, and also for the capacity building. This is some example of the cooperation with Bank Indonesia and also Financial Service Authority. I hope it could enrich you, enlighten you how the interaction between macroprudential policy and microprudential policy. Another one also is when we also conduct the for the specific issues here, we conduct like a stress test together now. So we have the same scenario that we conduct together to see how is actually the impact of the specific policy to the economy, to the financial system stability. We also conduct like the simulation, like the regularly, at least once a year, we conduct like a crisis simulation. So it's not only including Bank Indonesia and also OJK, but also like the Ministry of Finance. So we conduct together to see how the impact of the policy not only for BI and AJK, but what are the specific policy from the Ministry of Finance, and we can see how is the result and how is the impact to each institution. So this is some example that cooperation between Bank Indonesia and financial services authorities. Also the same with the Islamic banking. I think it's more broader. It's not only regarding the surveillance on the financial system stability, but also how then we develop the banking sector, Islamic banking sector itself. Like Bank Indonesia, we have a three pillar, like the empowering the finance banking sector, increasing the literacy, and also what else that we have here is like the strengthening the research capacity and education, financial market deepening, and also Sharia economic empowerment. Also some other initiatives that not only involve Bank Indonesia and Financial Services Authority, but also other institutions. The other one is regarding Fatin from the fintech innovation in the banking industry, and how is the acceptance of the government. I think the current situation, the pandemic, is accelerating the digital economy because of the limitation of the transaction. If I can share you, I don't prepare the data, but I can share you but there is the increasing number of the digital payment, and now we can also see that there is the changing of the platform that mostly general public use in a transaction. The less cash, and now also more payment using like the mobile banking, internet banking, and also now more people are using or propose like the loan not use that not directly goes to bank, but they are now try to use like the platform. So everything that done through the digital and less interaction. It's mean that also the acceptance of the general public now is quite high, because the current situation accelerating give experience. We believe that the current situation give experience to general public how to use the digital finance instrument, and we see that it will become a behavior. And if that become behavior, I think it will provide a better opportunity to more innovate money product and money platform. And one of the initiative is in the near time is API, the interface like the interface that linkage between the fintech and the e-commerce to the banking system. So I mean, in this case that the digitalization make easier for people to make a transaction. So, and also reducing the cost and the efficiency of the transaction itself. So we believe that in Indonesia, we would like to develop the digital finance. Of course, what we now need to do is to balance between the innovation itself and also with the prudential itself. Even some initiative more broadened rather than only talking about the digital finance. We see now that like the crypto asset, kemudian cryptocurrency is also now become issues, and also like the digital banking, CBDC, central bank digital currency is also one initiative that it not just only the concern, but I think we develop at the central bank. It is the need because like we see the concept of the money now is more broader, not only about the cash, the money by physics, but also now we see that there are digital money, even the card based or the chip based. Also now now that the stable coin, that is actually the main issues that will also boosting the development of the digital finance. And for the banking sector itself, now we see that digital banking it could come from the big tech, but also come also from the banking sector. Like the Bank Sentral Asia in Indonesia, they have launched the digital banking, which is separate with the main business of the banking itself. And like Bank Jago, even Bank Jago is the digital banking that have a different entity itself. So I think the acceptance for the fintech innovation in Indonesia is quite well. It's also supported by the most of the people in Indonesia, of the young generation. They are more familiar with digital gadget and anything. That's development in fintech innovation in Indonesia. And I think my explanation will enlighten you, Sister Fatin. And for Hanis, how is the buy for the in secondary market? I will show you one example. In one conditions, if suppose that maybe you remember that in I think 2023 or 26, when the tapering happened, you know that the current composition is the government holder is more than at that time is more than 30% is foreign. So the portfolio of the government bond is say that the certain amount is held by the foreign investor. So if there is something happen, say that the foreign investor, they would like to bring back their money, flight to quality back to their country or other portfolio investment in advanced economy. Of course, it could influence the stability of the foreign exchange. They not only influence the because they need to sell the government bond, and then they will buy the foreign exchange to bring the money going back to their country. There is two issues. The first is foreign exchange. The second one is the yield of the government itself. You can imagine if there is a lot of foreign investor would like to sell their portfolio in government bond. What happened? It will influence the yield of the government itself. That's not good condition. That's why in this condition, Bank Indonesia will buy this kind of government bond rather than to maintain the price of the yield itself, and also to mitigate the risk of the foreign exchange when they are need to sell their bond and they need to bring back their money going to overseas. So in this case, at that time, Bank Indonesia also offered to that foreign investor, if they want to sell their government bond to Bank Indonesia, Bank Indonesia will directly provide the foreign exchange. So that they have to go to the market and influence the exchange rates in the market. And we also have like the offering to them that to maintain even the good conditions, maybe we can say to them their money overseas like in the next 3 days, in the next 5 days, so it will like the smooth transfer overseas regarding the foreign exchange, because it's kind of like the capital flow in the short term. It will reflect it also in the balance of payment. So if we do that more structured, I think by have coordination with that foreign investor, it will give better influence to the market. That is what happened actually. Why you mentioned that by Bank Indonesia, by government bond in the secondary market, can have influence and have impact to the financial system stability. On top of that, actually, it's also have impact to the monetary policy, because government bond is one instrument of the monetary policy. So it's also will like we manage the reserve of the government bond as instrument of the monetary policy. So one day we can use, if we need to supply liquidity in the market, we can also or we would like to reduce the money circulation in the market, we can sell the government bond, and then we can bring back rupiah to the central bank. So this is the example of the impact of the Bank Indonesia in buy government bond in the secondary market. I think that my explanation enlightened you.
Yeah. So by the way, Dr. Alena, we have so many questions here. I don't expect that all the students here very interesting to ask you questions, but the time is so limited. Have limited until 3 p.m. So maybe I will just take some related questions with what Dr. Alena just now presented. So here, Doctor, the interesting question from Brother Nabil here, I think he questions about what the policy by Central Bank of Indonesia in the midst of pandemic COVID. What is the precaution to avoid any inflations because of the COVID-19? And the second question, Doctor, here I put the question from I think here from Masi, and here is quite similar with what Brother Nabil question about the role of Bank Indonesia, yeah, to take preemptive actions in regard of the COVID-19, the pandemic, quite similar with the Nabil's questions. And maybe to the second question here posed by Sister Safika here. Safika, she question about the government's plans to issue the wakalah suku. I don't know whether it is related with the presentation, but maybe Dr. Alena can give some enlightening answer. The two questions, Dr. Alena, first about the policy of BI in regard on the current COVID-19, and the second one is the government plans to wakalah global suku. Yes, Doctor, please.
Okay, thank you. For the second question, for wakalah global sukuk, what is the meaning of wakalah global sukuk? I'm sorry, maybe I cannot address this question, but at principle, I can share with you that currently Bank Indonesia is the government. Also, I think issuing global sukuk and also domestic sukuk. So it's mean that the sukuk is one alternative in government government financing, but the purpose of the sukuk, as stated in law of the finance of the sukuk itself, it should be used for the productive activities, and also for like the public purposes. I think that's what I know about the sukuk as one instrument in government spending. I'm sorry I cannot explore more about the wakalah sukuk, but that's what I know regarding the sukuk as the instrument for the government's financing. And the second one regarding the what is the Bank Indonesia response in policy in current pandemic, I actually tadi share with you, but I will emphasize what we are doing is for the monetary policy, we now lowering the interest rate. So we hope that by lowering the interest rate, even 6 times, and this is the lowest in the history, only 3.5%, it will reflect it by the credit rate in the banking and financial institution. So this condition will have capacity for the real sector to get credit from the bank if the rate of the lending is lower. Other thing is we are also reducing like the down payment for the household, for the vehicle. This is to support that if people don't have enough money to pay the down payment, they still can get a loan for the house and also for the vehicle. We also like the reducing the lending standard. We mean that we push banking sector to more easier to provide credit to the real sector. This is what we call the macroprudential policy accommodation. It's mean that create the ecosystem that the intermediary of the banking sector can go smoothly. Other policies is we are reducing the account average reserve requirement. So as we know that the bank have maintain some reserve requirement as the proportion of the non three-part funding in the bank. So currently we are reducing the reserve requirement that banking have to put in the central bank. So the bank have enough liquidity to support the real sector in terms of the credit. I think this is some example of the Bank Indonesia policy to support the financial institution. On top that some initiative regarding the payment system infrastructure to push more easier for the transaction, reduce the transaction cost, reduce the transfer cost. And in terms of the inflation, now inflation in Indonesia is very low. It's only 1 point something. That's actually not really good because we hope that in current condition, we would like to push the growth itself. So in this regard, actually by provide more liquidity in the market through banking sectors, even Bank Indonesia do the quantitative easing through Ministry of Finance by spending provide liquidity to the market. We would like to hit them, I think, make the activity in the market more active. So quite push the demand also. Quite the demand, so we can support the supply itself. So in this current situation, inflation is quite low. Actually, still under the standard, but under the target for the inflation, when we are setting up the target is based on the specific rate of growth. So in current condition, the growth itself is not under the target that we would like to achieve. Even we are now I think last quarter we experienced the minus in growth. So it's mean that if we maintain the level of inflation is still the same with the target of the growth, which is we are higher, it's actually not quite good. So the current focus in the policy is not related to the inflations, but how then central bank to push the growth and the activity in the real sector. Issues that we need to put into account, I think, is issues on the tapering. How then the advanced economy, if they are experiencing quite good growth, it's been that probably they would increasing their policy rate, the central bank. It's been that it's probably happen like capital flow goes to the advanced economy. So this is that we need into account. So we need to monitor closely. But when we see from based on the statement from the Federal Reserve, probably it's not happen in the near time. So currently, developing economy can have experienced quite enough liquidity from the advanced economy, but we need to closely monitor the tapering policy that will influence the capital flow flight to the quality. I think the issues for the central bank that we take into account the current situations.
Okay, thank you, Ibu Arliana, for the answer. From her answer just now, we can get some important points, actually, sisters and brothers, that Central Bank of Indonesia has been continuously conducting so many strategic policies in order to ensure that the stability and sustainability of the economy in the midst of pandemic is strong, resilient, and stable. And they have, Bank Indonesia released some microprudential policies, monetary policies, and payment system policies, so that all of these pillars are part and parcel in order to generate economic activity in the real sectors. And in the end, Bank Indonesia tries to promote the financial stability as part and parcel of its functions as the institutions that try to make the stability exist in the current pandemic. Sisters and brothers, I do sure that you have so many questions still in mind.
Pak Dimas,
yes.
Maybe I can share a little bit regarding the Sukuk Wakala, as mentioned before,
Yes.
because actually Sukuk Wakala have already been issued on last June by the government of Indonesia, and this is not the first time, as I mentioned before, that actually government of Indonesia have already issued the global Sukuk. This is I think the third time Sukuk Wakala have already been issued. I think there is some published information about the Sukuk that have already been issued, but I can see that Sukuk itself now become one of the sources of the government financing. So we see that the current situation where government deficit fiscal need more funding, so Sukuk of course become one of the alternatives that can reach broader base of investor. So a Sharia investor, I think more territory, more region that could be achieved by the government to increasing the capacity of fiscal space. Thank you.
Okay, thank you, Dr. Aliana, for the enlightening answer. So we have almost coming to the end of this programs. But before we end, Dr. Arina, because we are now here attended by young students, maybe future leaders, inshallah, maybe you have wise words, Doctor, or maybe advice to them, because they are coming from various universities in Malaysia, Indonesia, Bahrain, and others, in order to motivate them, maybe for the young leaders, young generations, what to be prepared and what should be done and so forth, Doctor, in your humble perspective. Dr. Aliana, please. And also advise myself as well.
Okay, I hope all of you will become a leader, a good leader. But maybe what I would like to share with you is that in preparing to become a leader, it's not only about the knowledge or the competencies, but we also need skill and attitude that very good. That's mean that we need to balance to build like the technical competencies like we discussed here. We know what is the economic, what is the current situation, what is the basic theory, but also to build the behavior competencies. Behavior competencies is, if I can share with you, there is three kind of basic competencies. The first is leading self, how we manage ourselves. Second one is leading others. I mean, how we interact with people, how then we try to influence them. If we can get a good idea, how can we convince that our idea is very good to others? How to leading self, leading people, and also leading organization. I mean, how we manage resources. So I hope even in this program, I think this program is not only covering competencies or knowledge only, but how then the competencies of the behavior, about the leadership, the digital mindset, digital leaderships, even the green digital concern about the frontier issues, about the climate change. It's also very important. So digital mindset, digital leadership mean that how we lead by distance. That's also some issues that we in Bank Indonesia also try to develop now, because we believe that our experience in current situation provide us that we probably will still maintain the digital platform as our platform to work and to learn, not going back fully as the previous, that we are fully in the same place, physical, but that's also very important. I hope this program also will provide issues how to develop the behavior and leadership, not only through the knowledge and substance, but also equip how to leading self, leading others, and leading organizations. That's for me. Okay, success to all of you. Thank you. Assalamualaikum warahmatullahi wabarakatuh.
Okay, Dr. Aliana and other participants, I guess that all of you has been enlightened by her, and you have been informed by the rule of Bank Indonesia and what the connection of BI with other institutions, and what the important role of Bank Indonesia in maintaining sustainability. And hopefully this information can be continuously improved, so you can just read and discuss with your friends, colleagues, and lecturers in your university. And hopefully the message from Dr. Aliana can be used for you as the motivations how to more better, and then more be achievement can be more after finishing joins. So Dr. Aliana, before we end the sessions, we will conduct photo sessions together. So we get some memorial activities in the end of the programs. Could everybody here please turn on the camera if you convenience and you can't, so we can take a photo together with Dr. Aliana, and hopefully this activity can be our memory. So maybe one day you visit Bank Indonesia or you meet Dr. Aliana in somewhere, so you can just greet her and get in touch with her, yeah, later on. Okay, Mas Firman, could you please help us to take a picture, please? Could you just count, Firman? 1, 2, 3, and then everybody here ready? You have already spent your time for 4 hours and very enlightening presentation information given to us, and hopefully we can get in touch and get some more collaboration in the future, doctor, with us. And I do sure that with your expertise, with your knowledge as experience, we can get some more information and also inspired by you in order to promote our leaders of tomorrow, particularly from young leaders or students, inshallah. With that, Dr. Alina and dear sisters and brothers, let me end this program by reciting Hamdalah together. Alhamdulillahirabbil alamin. With that, I end. Wassalamualaikum warahmatullahi wabarakatuh. Terima kasih Bu Arliana, Mas Fikri, Mas Aga, and others.
Thank you.
Good
Bye.
afternoon.
Success for all of you. Bye-bye.
Yes, thank you.
Thank you.
Thank you.